morning, good morning, good morning, everybody. It is Thursday, February 20th, just coming on 4 a.m., and I want to apologize in advance to you for both sharing a little bit too much information for many of you to be able to absorb this early in the morning, but I feel that it is prudent and necessary to share. And as well, that I will be leaving shortly after the opening bell today, as I have my checkup, call it kind of an emergency checkup with my doctors on Friday. My cardiologist as well as my oncologist, and I will not be monitoring the chat room or sending out an email tomorrow. And I will be back late Sunday night, so I will get an email out to you prior to your Sunday night. That way we can go over what takes place after today and tomorrow and the effects that it has. But as of right now, we are still sitting at that 61.30.50 area. We dropped down to 61.23 last night, and we are still hovering. I'll start out here, I guess, because the email I sent out at the weekend going into this, highlighting the big 586 and 325, and more importantly, looking at the red week plays. The red week plays being because we have had 5 green weeks in a row. It's not a record. I put in here S&P, SPX, QQQ have recorded 5 consecutive green weeks in a row. 23 times since the COVID bottom. SPX has had 3+ consecutive weeks in a row. 12 of them have been 4+, 4 of which have been since October 2023. And the 2 trades that I had on, looking obviously at that 61.20, 61.15, which worked very well until this week. And obviously looking at that big 60.75, which has for now been abandoned. I'll bring you over here. Again, with it, the green weeks began in OPEX in January. And back in OPEX in January is where you could see slightly range started compressing. We started losing out on 40-point range days. We had that 124, 25-point range day shortly after OPEX. And then we went and hit our high, our all-time high there, January 24th. And we closed red on that Friday. Notice as you go back and go back even into December, Fridays are closing red consistently, except OPEX Fridays. Fridays on OPEX week have all been closing green, all of them going back to November. Is it even in November? November 15th. November 15th was the last red on OPEX. That was where we kind of had our big sell-off and our bottom out there, 58.53. So, again, scrolling through here, we are going, at the moment, we are producing 1, 2, 3, 4, 5. This will be our 6th consecutive green week in a row. A lot of guys are putting their hands up and saying, that's it, I give up, I'm done. But again, bringing you back here, you can see how range has been compressing for the better part of 2 weeks now. We had our CPI, PPI movement, obviously, the -1%, +1% day there last week. And range has been compressing. 30 points there, not even 20 points on Friday last week, Valentine's Day, 30s and 36 yesterday. And I wouldn't expect, just out of a biased expectation, I wouldn't expect that range to expand despite lots and lots of negative press coming out, all having to do with, implications that are going to have ramifications in the future. So same thing over on the QQQ. Again, same thing, looking at 6 green weeks in a row. I unfortunately do not have that tracked for you. However, since everything is inside the QQQ, you can automatically make your assumption as to the implications of what we're about to discuss. So anyway, I will bring you over onto the charts, and I think and I hope, and I am wrong, I did not start this in the right place. Nope, that's where I want to leave. And so here we are. I start you out here with IWM. So IWM being the weakest link of the links, and we've been pretty successful over recent days using that 227 to play the 227 puts and getting nice dips down there. Not breaking 225, but getting down there below 226 and putting pressure on that 225. Well, that is, a lot of fun, but at the same time, it's very limited into the ability of what can be used with it. Over onto the Dow Jones. The Dow Jones, nothing, still consistent, nothing whatsoever. We are getting nothing out of the Dow Jones at all, and we are still waiting to see any kind of pressure that comes onto 438. So now we get into the technicals here on the QQQ. And again, with the QQQ, like I stated earlier in the week, yes, this thing can go up to 542, can push for 544 even. And still, even with those numbers there that are 1.3 points higher, my personal opinion is I don't care, because I'm already looking out to April, looking out to June, September, December, and I really don't care about the 1.2 points possibilities that we have here during OPEX week, which, as I've shared every single month of OPEX for years, that OPEX is designed to destroy small accounts. Doesn't matter how good or how bad you are, OPEX weeks are there to beat you up and rip you to shreds. And from the wider view over on the QQQ, looking back at when the all-time highs were placed prior to that FOMC meeting in December, where we had that massive sell down, it's nothing, ABC, 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 ABC. There's literally zero structure to this at all. Nothing there, where I still hold my hat on my personal view, being that the QQQ topped its wave 5 finally over there in December. Now, I'll give it an alternative and say, yeah, okay, sure, that was your wave 3. Your wave 4 was your sell down here in December into the beginning of the year, and we're looking at wave 5. Okay, I'll give you that. And on that view, giving you that, what are we looking at? Possibly making a move up into the 548, 550, 553, perfect world, 558.71, and I still have a hard time trying to figure out where that would come from. But until we start seeing it break down back below 530, this is the assumption that needs to be made. And for those of you who do not have any exposure or understanding as to what we're discussing here, don't sit here and try and make decisions when we're talking about possibilities of extremely wide time frames, when all that we have done here is for a 2-day period during OPEX started to put a little bit of pressure on what was already perfectly in place. But now you come over here on to what I discussed with you about the full moons, and the full moon, how I want to place that full moon top up here. I want to do it. But yesterday, the close on Wednesday, or the close on Tuesday, and then yesterday's action, that's it. I have no choice. I have to give respect to what the art of the full moon is. And I have to put that full moon low over there on 6,003. Now, what does that mean? What does that mean? Well, what it means is that you are hearing about the full moon. You have your own SPX chart. You have one. Everybody has one. Go onto your SPX chart and go and draw a circle where your full moons are, and see how ramification, impact it is of having a high or a low, as we're a week away, 1 week from now, where we'll be looking at our new moon. But what we did yesterday is, by making that move to 61.47.43, we have now made a plus 20% move off of that August low. That sell-off that we had in July, very quickly down there into August, 9.7%, and that is where your August low is. Now, for a lot of other guys that are talking about trend lines, You see here your trend line that I've got here in blue, which is pointing down here to 5,700. I'm going to remove these because they no longer have to be there. But I want you to see how that trend line moves, right? Now that trend line is down here at 55.30 because I've moved on to the daily. And I'll move on to a 5-year weekly. Now you see how it's still there at 5,600. So the way that these trend lines are drawn and how everybody's using this of, oh my God, look at this. Some people are drawing this trend line on a random chart, putting it together and making the connection of these 2 points. The 2 points being your 2007 high, your 2022 high, and where we are now. Well, trend lines are useless. They're totally fucking useless. So keep yourself off of that. But there again, being that we are able to show this, it leads me into where I'm planning to go with it, which is coming off of your 2009 bottom. More importantly, looking at your February of 2016 bottom, we're now up 239.61% from that. We are now up 180% from the 5-year anniversary of COVID, which took place yesterday. We're up 76% from the October 2022 lows. We're up 49.8% from the Israel invade Gaza of 2023 lows back in October. And again, to bring it out into context, you were minus 27.54% on your October of 2022 low. The last minus 10% correction ended right there when Israel invaded Gaza in 2023. You had your dip over here in April going into February going into March, minus 9.2%. And we had your minus 9.7% coming off of your sell-off here back in July into the August bottom, into the September 11th ba-bam, which is where we are today, coming into that. Still looking at what I had been tracking from a zoomed-in point of view on the ES has almost made contact with that 61.69.95, so 61.70. It's almost made contact, but you can see the pressure that is coming there, and that all came off of that move from a week ago Friday, that week ago Friday, poof, the push up, and how we've gone sideways ever since. That's your move over here. Coming on to where our 6,003 CPI bottom by the dip. We're going plus 1% on the subsequent day after that because of the minus 1%. And it all was absolutely incredible and fantastic, and bringing us in here into the close on Thursday, which looked as if to be a perfect C. A, B, C. Everything looks great. Here we go. And that being Valentine's Day on Friday, Thursday being February 13th, the full moon being over here on February 12th. It looked great, looked amazing, looked fantastic. And then Friday, and then Tuesday, and all that we had was that little dip, which again I mentioned because of it being OPEX week, that fuckery of that dip below 6,100 for a couple of minutes there on Tuesday. This is where everything changed for me, right here. That closing bell there on Tuesday. And it put me on notice, a big notice. And as yesterday morning, we couldn't get down there below that 61.10, 61.15. I have no choice but to go and put that in that full moon low, going over here at 6,003, and knowing, like I mentioned earlier in the week, that I see no catalyst, real catalyst, until we get into the latter part of next week, towards the end of the month, where we get NVIDIA's earnings next week, and we also get the new moon. Happen to be that they coincide with one another. So looking at that as to a zoomed out point of view from there, again, if this is intended to be bullish, this is nowhere even fucking close to having gotten started. Nowhere close. I mean, we're talking about moving up into the 6,300s. And here we are, like I shared with you, extremely overbought on the QQQ, and it's OPEX week. So I still have serious doubts as to the bullishness of this from a wider point of view and zoom it out a little bit more to get a bigger picture on this. Again, 6180, possible. 6180, not holding anything against that. Although the respect I had for 6145 and over there on 6128, both of those seem to have been very in line with what the algorithm of the market had been using. 6128 worked every single time that we came close to it. Yesterday was the first time we came to 6145, so it's still untested. But again, looking at this from the bigger, broader, wider view coming off of the August bottom, you've got your 1, 2, 3, your 4, and this would be a wave 5. And a wave 5, if this is intended to be as bullish as people talk about, then we can't even start saying anything until we get up into the 6280, 6270, 6280. And here we are struggling to move sideways just a couple of points. So, again, that's my view as we are from a discussion point as that goes. But where I want to bring you is into a little bit of a reality check, because yesterday being the 5-year anniversary since the COVID top, here's a view at your SPX weekly looking at your 2002 bottom back in October 2022. And then your revisit of the .com highs to fractionally put in a tick, just a couple of points higher for the 2007 highs. It was exactly 5 years. Call it exactly 5 years, off by a couple of days. You see your negative divergences that were building for quite a long period of time prior to that high being placed in, and everybody knows what happened after 2007, which comes into your 2009 bottom, which happened to be on March 9th of 2009. And while very close to being exactly 2 years from the bottom, you came over here and placed your high right before the Asian bird flu kicked in. Not really anything specific about this other than looking at this from a technical point of view. As you can see how everything had peaked right there back in the beginning of the year of 2011 and just continued to get more negative and more negative until finally we did get a little bit of a sell down. But bring you on here to the 11-year, almost exactly 11 years from the bottom of 2009 into the COVID top, which was 5 years ago yesterday. The bottom of COVID, the bottom of 2009, almost exactly 11 years. But again, what we're looking at here is strictly just the time frame. We're not looking at anything from a technical point of view because you guys just don't have the time in order to absorb this from all different multiple angles. But here, bring you on to the 2016 bottom, February, and then going in there to the very end of January 2018 top. Almost exactly 2 years. Then you got your 11% drop. And where did you wind up bottoming out? You bottomed out here on Christmas, almost 3 years. But again, point being, your negative selling divergences that were all over the place, even though you put in a fractionally higher high going in there into September. And funny enough, just because we're here talking about it, this 2818 that you may or may not be able to see on your chart, that's the very start of December of 2018 before we had 4 red weeks in a row. That was when Trump came out and said, I made a China deal. China deal is back on the table again. Here's your look at 2023 to 2025, looking at the March bottom of 2023. And here we are, again, with this running negative divergence, which had peaked well back in the middle of summer last year. Everything is dropping as far as your technical support for price to continue to the upside. And yet here we are, about to place a 6th consecutive green week. Pending, but it's there. So then I bring you to your view looking at this from a wider point of view, looking at the COVID bottom into where we are now, which, as I shared with you earlier, is up around 178%. And where we reached yesterday, that's 61.45, being the 200 extension of the COVID drop, 200 retracement of it. Your negative divergences started early in 2024, peaked in the summer of 2024. And here we are. Over here on your MACD, on your money flow, all of these, your money flow peaked in the very beginning of 2024. Over here in April of 2024 on your MACD. And this is all because the money is into passive income. It's all in ETFs. Nobody is buying any of this stuff. Nobody. And that's where it's all at. So I bring you again into the wider view of this, looking at it from 2009 to 2025, with March 9 being the bottom of 2029. And as we are coming in here into, call it 16 years, as we go into March 9th, which, as you've been shared multiple times, is the next Fibonacci time spiral, looking at it from a December point of view. The negative divergences are screaming all in your face, but it doesn't matter, and there's nothing you're going to be able to do about it other than just come over and try and make it a little bit simple. And coming back over here to 2009, I'm only looking at weeks where we went 6 consecutive green weeks or more in a row. The bottom, 6. 6 again prior to that little dip. 7, 6, 7, 8, 7, 6, 9. 6, 9, 6. Nothing. From COVID up to the 2022 highs, I have 0 that fit this 6 green weeks in a row or better. Come on back over into your 2022 drop, your 2022 drop, your 2023 bounce. Again, nothing. Only after Israel invaded Gaza in October of 2023 did we start into this embolism, you might call it, of lack of dipping. 9, 6, 6, and here we are again with another 6. So, for those of you who are going to be looking at making a trade for next week, prior to the weekend, that is what I have to share with you, that right there. Since I will not be around tomorrow, I will not be able to post later as we get closer to the close to remind everybody about how this is the 6th green week in a row. I hope that the trade works out. I really do, that today and tomorrow, with this week being started at 61.21.60, I hope that the not only 61.20, 61.15s that were issued out over the weekend, I hope that they work. I really hope that you get back below that 60.75, because when you look at your 60.75, where are you? This is it, isn't it? Yeah, I do think this is it. Looking at this week, coming off of that 6,003, going nowhere, and then yesterday getting a float to the upside, where some people were miraculously already long. 30 days, change this out, price, manual, 60.70. That's your 60.70. You know, a pop up above it from a gap back here in January and right back down under it via a gap. Gap up over here back at the end of the month in January and a sell down back below it. A quick visit over here in the early part of February and a retracement there on the Friday. And here we are now, Thursday, Friday last week, and we're hovering above it. So 60.75 is still going to be your honesty level. However, if you do or do not decide to take any trades as you go into the weekend, again, I won't hold it against you, because this is a time and a period where you take off the one hat and you have on the other hat, because you are always looking 3 months, 6 months, 9 months down the road, because that is where you can actually place your big trades. Listen, I hope everything goes well at the doctor's. I wish you all the best. I hope you have a good trading day. I hope tomorrow's successful for you as well. And enjoy your weekend. I'll see you guys next week.